What's up, guys? It's Brian from HASHWAREHUB. It's about 10 a.m. Eastern Time, December 29th, and we're coming to you with a brand new trading video. This is kind of a morning update video here on recent price action. But if you're new to us and you haven't subscribed, hit the subscribe button, hit the notification bell so you get all the information directly to you. What we're looking at right now is Bitcoin, the hourly chart on Bitfinex, and normally when I do these videos, I prepare a bit about what I'd like to say. This one I haven't, so you're gonna have to excuse me if I stumble a little bit more than I normally do. I'm still practicing at this. I'm not that great. Public speaker, I'm awesome, but for some reason, talking to a camera, not so great. Anyway, so what are we looking at here? We had done a video last night, and the video last night, if I'm not mistaken, the price was somewhere around here, if I'm not mistaken. And I woke up this morning and I saw kind of like this triangle formation. You could see I draw things all over the place. As we kind of proceed in time, I kind of erase some of them just because otherwise the chart gets a little crazy. But I saw like a triangle here. I saw a bullish flag here. I saw a little triangle here. And now I'm seeing kind of like this bigger triangle, formation right here. And the reason why I'm so into triangles is because cryptocurrencies are into triangles. The traditional markets, they don't have as many triangle formations, but cryptocurrencies, they got a lot of them. So I'm a little bit more in tune to go ahead and do that. And, I still leave up this head and shoulders kind of neckline type thing here, even though it's really not applicable because the volume really didn't follow a true traditional head and shoulders. But I do feel that some of that is still in play. The correction, the way in which we are defining this correction here as an extended flat, and we have videos on that going back the past few days. So I would take a look a little bit more of that, or even Google it, and you'll see, and you'll see exactly what we're talking about there. But really, what are we looking at here? So you could do various different Elliott wave counts, and that's kind of what gives us kind of a bigger picture, and then we kind of get a little bit more surgical with the indicators that we have on the previous application, or the other application that you guys are normally used to on the black screen, and we're going to get to that in a second too. But Elliott waves gives us like a bigger picture of what's going on. Where are we in this whole thing? And it's kind of mixed. Really, we've been going with a primary count that this was going to go higher. And there's various different ways you can count it. You can count this as being 1, 2, and then possibly there may be a 3, 4, and a 5, where what we're looking at right now is kind of subwaves. So subwaves of the third wave, of the third leg up. Or you can look that this is kind of like, this is 1, 2, and then up. There's another count where you can say this is actually a correction. This is a part of a larger correction coming down. And we've been kind of, the probability of that's kind of been increasing even overnight here. We had thought maybe last night when we kind of went to bed that this may extend up a little bit higher, but it didn't, and it's kind of coming back down. Maybe it's because it's coming back down because of this triangle formation is happening, and then this triangle formation will kind of terminate, and then this will run up higher, possibly, or it may run down lower. It's difficult to say. So this plays right into our hands with the way in which we always talk about how to go about trading and de-risking. Why? Because you leave some of your powder dry, and that's a saying back to times of when you needed to fill your gun with actual gunpowder. You needed it to be dry, otherwise you were gonna die. So same thing here too. You need to have some cash in your portfolio. Normally we run, I guess the lowest amount of cash we run is somewhere around like 10%. When it gets down to like 5%, we get nervous because our options of what we can do are relatively limited. It really reduces what you can actually do. What we ideally like is anywhere between 10 and like 30%. We kind of really look for a 20% sweet spot. Now, Some people may say that's too much, but that's the way I've always traded, and that's really the only way I found any successful trader really ever trades. They always have cash and on hand, always. So what is that really going to do for us here? If the market were to come down here to like this 11,000 range, it could even come down to this 9,000 range. I mean, there's counts that we can do, Elliott wave counts that we can do that, it's pretty probabilistic that 9,000 could actually happen. Now, I know there may be people right now maybe gritting their teeth and they wanted to go ahead and change the video to another video that has a little bit more bullish of a sentiment. Well, okay, great. Go ahead, do that, at your own peril, because there is a chance that it could happen. And what we're trying to do is we're trying to prepare people for that. So, that's why I always say de-risk, de-risk, de-risk. And through the normal charts, the black charts that we normally show you, we've been screaming de-risk all through here, all through this time period right here. I mean, if you did that, you've had, and especially here, if you did that, man, you're sitting in a great position really to do anything, really to say, all right, come to me, market, come to me. And you can be really selective in where you want to go ahead and you want to purchase. You can start laddering in, trades as the market comes down. You pick up some more, you pick up some more, you pick up some more, and you ladder them in based on support levels that you choose. Near-term support levels and some bigger support levels. So now what are we really looking for, okay? What is going to tell us, boom, we're really in a bullish trend. We're going to make a new high here. There's one major outstanding thing, higher highs, right? You could say, okay, well, that's pretty stupid, Brian. That's obvious. Well, yeah, okay, it's obvious. But where? Where should those higher highs be made? Right here, okay? Anywhere between like this 15,900 all the way up to here, like 16,600, 16,700, right around here. This is kind of the aha range. Once we get into that range, there's a lot of junk that's going on between this range. I mean, look at it. It's chock full of resistance now. Before it was support, now it's resistance. It's chock full of it. And quite honestly, I think everyone's sleeping because it's Christmas season and New Year's season. I think everybody's out partying, thinking they had all these these great gains in 2017 and 2018 is going to be great. Well, if you don't get back to your trading screens, it may not be so great in the beginning of the year, because if it comes up here again and it does not break through here, chances are we're going to see a much lower low. That's what we're estimating on. That's what we're predicting. And, okay, I mean, hate us for it, but that's the way we see things right now. We'd love to be a little bit more bullish about things, but it doesn't seem to be that right now. It doesn't. Now, that could change drastically. If people come in and really start pushing this thing up and it gets above here, makes a higher high and things look really strong, okay, yeah, and we're going to change. And we paint the picture as we see more information coming in. So let's go ahead and take a look at some of those more traditional type of charts that we've been showing everyone. Okay, we're back. So this is 1 hour chart, Bitcoin on Poloniex, and let's take a look here. I think last night we were somewhere around this level around here. Don't remember exactly, but somewhere around here where we did purchase in, and we purchased back around. Yes, I think it was right here. Or here. Yes. So, yeah, I mean, overnight, actually, we actually got out of some of our positions, specifically right along this blue line right here. And that's where we went ahead and, I stayed up late and this blue line came up. And what I did was I put in a stop loss specifically on this blue line. And I woke up early. I woke up like right along here, right here on this bar. And the bar was still forming. But what did I see? So I saw that the trend was coming off. I saw that the trend strength, peaked and then it came back down. It actually didn't get as high as we'd like it to get. We'd like it to get right up here, okay, and it didn't actually get there. It fell just slightly short, and then it came down. So that was telling me that possibly the market, is not as bullish as we would like it to be. Okay. Also, we also see that the sine wave indicator had topped out. So the tendency of the market is to go down from this point, and that's exactly what happened. Everything was kind of pointing down, and that's exactly what happened. So as the market came down, I got out of my full trade that I got into, from here and here. I got out of my full trade specifically on the blue line for a small pickup, and it's better than a loss, and I'll take that. I think it was about a 10% pickup if I'm not mistaken overall, and hey, 10% is freaking phenomenal. It's an awesome trade. And so, okay, so what do we see here? So the market kind of sold off again here, and we see the sign indicator here is bottoming, but there's really no reason to buy anything. I mean, the trend strength indicator is still kind of falling, and we see the blue line coming in again. That's somewhat of a bullish signal. It's not a signal to buy, but it's kind of a bullish signal saying, yeah, okay, there's kind of some hidden support in here. And, some people have had some questions, exactly what should we think of this blue line as, this cayenne line as? And, I thank people for those questions because it helps me. I've been looking at this stuff for a very long time, this stuff that I created over the years, so I know it intimately, so I just call it the blue line. But I know what it's used for, really, and really the way in which we now should be coining it is called hidden support. Okay, this is hidden support level. And as I mentioned, the 3 ways, in all my videos, I pretty much mentioned the 3 ways of going ahead and using it. So hidden support. So now that we see kind of this hidden support being, showing its head again, right here in these last two candles, that's kind of a bullish sentiment. We like to see that. We like seeing that when that happens. Now, it doesn't mean that the market's going to go up. You could see right here, this bullish sentiment came again, right? It came in here again, and it came down. So it's more of a hidden support range more so than anything else. It's not necessarily a trading signal. It's more of, like I say, a hidden support. So there's really no reason to purchase right now. I don't see any reason to purchase anything right now. If anything, holding cash is a great strategy for right this second for what I'm looking at. So we're going to leave it there for now. It's almost about 10:30 Eastern time, and let's follow this throughout the day. So any questions, leave a comment below, email us, and hit the subscribe button, hit the notification bell, and yeah, we'll be talking to you soon. Thanks.